In this video, I will review the latest Bitcoin price today and share my Bitcoin analysis on the charts. I will go through my thoughts on the Bitcoin price and share my Bitcoin price prediction for 2022. Will Bitcoin crash to historic lows? As we get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe? Tap the bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. Now, if you have not yet joined us in Discord, links in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out today? Okay, guys, let's get into this in a bit more detail. So as you can see here, we have Bitcoin paired up with USD, and this is our weekly chart using Bitstamp as our data source. Now, we obviously have access here to see all the data from 2011 all the way through to current. Now, obviously, Bitcoin did start a little bit earlier than this, but essentially this is early enough to get a good idea as to how the 2013 previous all-time highs were, the bear market lows, the 2017 all-time high, and the bear market lows that followed. And of course, we have the 2021 all-time highs. So this gives us a bit of an idea and a bit of an understanding as to how these things have worked in the past. And obviously, we can use tools that we have access to here in TradingView to help us understand where things are likely to go next. So that's exactly what we're going to do. Is we're going to take a look at a couple of things. We're really going to just zoom in here on this 2013 area. Let me just put that back where it was, and we're just going to zoom in just to see this bear market low and this all-time high. So 2013 all-time high and the 2015 bear market low. Okay, this was a low that took 413 days from the all-time high to the low point. Okay, but we can see that we have a definitive kind of level of bouncing going on here. Now, I know that there are lots of ways that people have measured things in this space, right? And they take a look and they try to apply Elliott wave theory, and they can quite easily see that this is an ABC structure, right? And even though they use the terminology ABC, technically speaking, it's actually WXY. ABC used to be more popular as a corrective term, so a lot of, I guess, OGs in the space will tend to use ABCs, but technically speaking, these are less common now than they used to be. Okay, but you can kind of see that that's kind of what you have here using Elliott wave. Now, the way that I would measure this is I would grab this low point just down here, just using the magnet tool just to hook onto that wick, and then I'll take it up into the all-time high just here. Then what I'm going to do is I'm going to move this fib, and you can see how it's locked in, right? It doesn't change its size. It is basically locked to the size of the movement here, right? It's exactly that same size. If I put it back, you can kind of see that. And what I'm going to do is I'm going to move it over to this point just here. And what we can do is we can move it to this high point, the bounce. So if we were to take a look at that as an ABC, so A, B, and C, you can see that the C wave came down to just above the 1.236. Okay, the 1-to-1 ratio would be $199 Bitcoin, and so you can see that it went a little bit beyond the 1-to-1 ratio, with the A wave being exactly the same as the C wave. And for those who are unfamiliar, that's the most common area for one of these retracements. They most commonly go to a 1-to-1 ratio. So we know that in 2013, the high down to the bear market low at the January 2015 was just a slight overextension on a 1-to-1 ratio. Okay, and again, you can also take the subwave counts as well, as in you have this as an A wave, you move this over to the B wave bounce, and here you can see the same scenario, just a little bit over 1-to-1 and a little bit short than 1.236. Okay, again, you've got your subwave count right here as A, B, and C, or WXY to be more accurate. So that's kind of what was going on there, right? And I'm telling you this and I'm going through this so you understand the methodology for when we come up to the current times. Now, if I come over here to the 2017 all-time high, and we have the 2018 bear market low. Okay, so this was actually a point that we went from all-time high to bear market low in 364 days. Okay, that was an 84% drop. Previously, we were at 86% drop. So we're getting faster bear markets across these two, and it's getting less severe. Okay, but obviously we had the initial pullback that was more severe than the initial pullback in 2013. Okay, so we can understand this. The same principle applies again if we grab our corrective pattern here. We have A, we have B, and we have C. And technically speaking, we'd have to have it up here. So it'd be looking like this. And now this one's a very clear overextension. Okay, it's not a one-to-one. I don't even have to measure this to know. If we were to go ahead and use the fib tool, we're going to go grab it. We're going to grab the fib. We're going to move it over to this high point just here. And you can see that we are overextended once again. But we did not cross the 1.236, but we did a little bit overextending on the one-to-one ratio. This is basically telling us that we have got, a common kind of ground now between these two bear markets on this retracement. We've gone over the one-to-one, but we have stayed within the 1.236. Okay, so again, we're halfway through here. Again, we have the subwave counts. You could, of course, take a look at this. We've got a subwave count there. We've got that as an entire wave. We've got bounce up and then we morph back down. If I remove that fib and we just check our subwave count, so I'll take it from this high point here to here, move it over here. Again, this time we actually come down to the 1.382. Okay, so one-to-one, we crossed. Actually, the one-to-one area became a bit of a resistance for us, but we did pull back down. We lost the 1.236 and we came down to the 1.382. And the reason that you want to kind of take a look at these subwaves count specifically is that it kind of the subwaves are more important than the macro, right? So we have a macro move that was saying the one-to-one ratio, but the subwave counts were indicating that we were getting overextended. And if we were to take a look at this, we could see that as a 5-wave move, meaning that this entire thing ended in a 3-3-5 corrective structure. Okay, so just to note that that's how you end up in these low points. And again, it was quite quick. It was 364 days. It was not a multi-year bear market. I know people misunderstand exactly what is going on here, but yeah, it was not a bear market for 2 or 3 years. It was a bear market that lasted only 364 days, which is important to note. But let's go ahead and take a look at what is going on today, because if we're talking about Bitcoin, the Bitcoin price prediction for 2022, and whether Bitcoin is going to have these historic lows, then it's important that we apply these techniques that we've seen previously, and obviously get the correct kind of assumptions. So we can quite clearly see that we have this ABC structure right here, ABC structure, and we haven't finished this C structure yet, right? And it's important that we actually measure out where do we think that's likely to go. So our one-to-one ratio puts us down at $23,000, but of course we have history telling us that we are likely to kind of go a little bit beyond one-to-one. One-to-one is the most common though, so we should be thinking there's a strong chance of a bounce in that area. And the 1.236, guys, it comes in at 19,300. So essentially just on the previous all-time high. If we come over here, you can see this yellow line is the previous all-time high. And our 1.236 is right here on top of that line, which means there's a strong chance that we're just going to bounce from this area. And that's if we actually come down all the way to a 1.236, which history has told us we haven't. We've actually just fallen short of it. So really interesting. But as I said before, it's really important to make sure that we have good subwave counts, right? The subwave counts essentially are the tool that is going to tell us where the actual bottom is going to be. Okay, it probably will be a little bit over the one-to-one, but I don't think it's going to be going to the 1.236. And this is something I've been talking about for quite some time, that people are in the space across Twitter and YouTube or whatever, that they're talking about these crazy low bear markets where we are going down into $12,000 Bitcoin. Some people I've seen talking about going down significantly lower. And again, these are possible scenarios. I just don't think they're probable. I have my bear market low marked out at $23,000, but I think it's actually going to go somewhere between 20 and 23,000. I think essentially that's kind of the area that we're scoping out at the moment. And the reason I think a lot of people have got this miscalculated is that they haven't got their charts correctly structured, right? So I've just turned the logarithmic scale off. And if I start to draw this up when it's not on logarithmic, well, you can see it's not on logarithmic. You can see here we come down to $12,000 on a one-to-one ratio, right? But the difference here is that my Fibonacci charts, okay, under styling, are based on logarithmic. Okay, so I have to basically now adjust everything to whether it's logarithmic or not, right? So if I'm not on logarithmic, which I think is crazy, you'd have to be on logarithmic to make sense of any of this stuff, then it's important that your tools are on logarithmic as well, otherwise you're going to get vastly different results. So a $12,000 Bitcoin simply isn't going to be the case. And again, we can actually go ahead and check the previous run. So let me just delete this. we'll come over to our 2017 high and our 2018 bear market low. We'll just expand this up, right? Bear in mind we're not on logarithmic here. And if we were to go ahead and take the same scenario as what I just did, right? And we were to take this and we were to move it over, the bear market low would have been negative 1,900. Okay, we cannot go into a negative number. You can go to 0, but you can't go down to negative number. So it's important that when you're using your charts that you actually have these things set up correctly. I spoke about this the other day as well. So when people are calling out $12,000 Bitcoin, all I can see is that they aren't actually doing it correctly. So let me turn logarithmic scale back on, and we bring this back up. We can actually start to make some more sense over what is going on with these charts. So we know that $12,000 Bitcoin and the methodology used to ascertain $12,000 Bitcoin isn't viable. It's not the correct methodology of actually, applying the tools to the charts. So we'll keep all of that in the back of our minds. $12,000, is pure hopium. As much as I would love to kind of be able to buy in that kind of scenario, I just don't see it coming. I don't see the scenario of it going that low. For multiple different reasons. Outside of all the stuff that we've spoken about today, there's a whole host of different things that we can use, different tools that we can use that also confirm my Elliott wave analysis of a $23,000 to $20,000 low point for Bitcoin. So I'm going to throw a couple of these on. I've spoken about them before, but we have the EMAs. Now, the exponential moving averages. These exponential moving averages are really useful. They aren't a tool that I use because they are a lagging indicator. Okay, so I'll get that kind of spoken about off the bat, right? EMAs, SMAs, any kind of moving average. Essentially, it's historical price movements, okay? But traders will react to them. So it's important we acknowledge them. I don't tend to use them. I use other tools such as Elliott wave theory, stochastic RSIs, relative strength index. But I don't use averages all that often because they're a lagging indicator. And the same with the MACD, they're lagging indicators. But nonetheless, with this EMAs, these exponential moving averages, we can of course see patterns in the data for what happened previously. Once you've closed a weekly candle below the 20 EMA, historically speaking, you go down lower than the 55 EMA. Okay, so that's exactly what happened here in 2013, 2017, and 2021. We are basically closed below it, we come down, and we're going to close below the 55. Okay, so whether you like the EMAs or not, there's patterns in the data here that can be seen. Now, of course, we can go over to the simple moving average. Now, simple moving average is a nice, clean example, actually, of where things could potentially go down to. Again, a lagging indicator, don't use it too often, but it's a good way to kind of just keep a measure on how traders are going to react at certain price points. So here we can see that basically we rest on top of the 200 simple moving average, okay, in the bear market lows of 2015. Same thing up in December of 2018, we rest on the simple 200 moving average. Okay, the COVID crash just pulled down briefly below it, but it's a black swan event, so we cannot really utilize that one. But it's good to note that we did actually just briefly come below that 200 simple moving average. And where is the simple moving average right now? It's at $22,000, right? So right in line with the analysis for Elliott wave. I'll have our wave counts all the way down at $22,000. We've got the EMAs down at $22,000, and we could see the bear market low right down here between $20,000 and $23,000 Bitcoin. What this is not indicating to us is a complete collapse of the price vastly below, it's possible of course, but vastly below that simple 200 moving average. It's never happened before, but it can happen, of course. I just don't think it's likely based on the methodology of how people have ascertained $12,000 being incorrect. I think the number is just being plucked out of the air, which is something quite common that happens a fair bit. But hopefully this, guys, helps you understand, is there going to be a historical low for Bitcoin? Crashing down lower than the previous all-time high that's never happened in Bitcoin's history before. Is there something new happening here? I don't think we are going to see this. There's many reasons for it. I've covered only a handful of them in this particular video, but hopefully this gives you a bit of an idea as to what my analysis is indicating inside the charts. If you found this useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. With all this said, done and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.